Good morning. My name is Walter Hartmann. May I introduce you today's session in order to show you a bit the functionality of Unit4 Prevero's application in order to cover the requirements of IFRS 16 lease. I start to share my screen and we will just have a look into the application itself. It's built within a scenario within the typical CPM application of Unit4 Prevero. So you see on the left-hand side the possibility to navigate within the application, and on the right-hand side you see a workflow within the application. The access possibilities are of course here web-based, so we're using the so-called one client. In this case, I use the Microsoft Internet Explorer. However, you can opt for any other Explorer using the application. And when doing that, we can reduce that as well a bit in order to see more of the application available. We have there the full application available, and typical, that's the way how the user joins. He can select now for which company he's in charge. Of course, that's designed in a way and based on the user rights the person who is entering the application has. In my case, I have now full access, so seeing all the 6 different sample companies. If someone would only have the user right for entity 4, he would there get only the selection of company 4. As well, if there's a mix of 2 companies, 4 and 5, he would see company 4 and 5. So the user authorization here covers that everyone only gets those data he's really allowed to see. You can opt here for the language. I've chosen the company. You get now the 4 main possibilities for the application. So main part 1 is the possibility to enter or change an existing contract. The second one is the workflow in order to get the data from the different steps, do some validation checks, create the journal entries, and at the very end, export the data. The medium part here in the reports, there you get additional reports based on more or less all the contracts for a functional currency of an entity, or from a group perspective, getting really all the information requested for a whole group in order to get their full picture. What's the IFRS lease impact for the whole group? Then we have additionally the necessary disclosures for the IFRS notes, so mainly a point of the year-end closing. Last major item is then the administration part, and that's the part with which I want to start. There you can set the major data and define the structures. So starting with the reporting period, and then the reporting period, we cover a selection of a large number before the original year 2019, when IFRS 16 becomes applicable, especially for those who want to opt for a retrospective view, and of course a large number of future years until 2051 in order to cover all impacts of existing lease contracts and also future lease contracts. However, that's not totally limited. So whenever you are in a situation that you have very long-term contracts, you are of course able to add additional periods in order to cover even long-term periods of, for instance, real estate leasing of 30 or 50 years. Going back to the navigation part, we have then the entity of the legal entity or the companies. There we set up and create our legal entities. They have, of course, all a local functional currency. That's the currency where we will later on translate all the different contracts into, because there we think they will need an analysis and a journal entry based on that functional local currency. However, as you can see, the contracts itself could be handled in different currencies. So, for instance, if you have an entity in Mexico using Mexican peso as local currency, they can, of course, also have contracts in US dollars, in Mexican peso, and both will then be converted into the local currency, Mexican peso, in order to get the impact from the journal entries from there. The countries is just in order to give some later on selection on the regional part. You can opt for a tax rate in order to calculate deferred tax impacts. And then the first selection you have to make is to decide for each company separately what kind of approach you want to pick up. So typically, I think you will pick up the cumulative approach, so starting from 1st of January 2019. However, the system is also capable to cover the full retrospective approach. You can opt there for the catch-up only or the possibility to prepaid accrual expenses. We define the transition date. That's typically the 1st of January 2019. However, might be different if you have a fiscal year not being equivalent to the calendar year. Next, very important point, you can opt for later on analysis and later on reporting. What chart of account shall be used? You see we have there in the example only one chart of account, the so-called group chart of account. That will in many cases be a quite usual option to do this. However, you will be able to select a local chart of account for each entity if requested. You define then the low value currency. That's the legal defined amount of 5,000 US dollar. However, if you have got any different arrangement with your auditors, you can there enter that as well. Can then select what kind of posting format you would prefer, whether you want to get the data month to date or year to date. What's even more convenient for the further continuing work with your ERP or consolidation system. Next item is that you have to place 3 ticks about the options what will be provided by the system. The system, of course, provides you with a calculation IFRS 16. That's, of course, what you request from this application. Anyhow, it's also capable to, by the information you give to the system for each lease contract, to calculate the impact to the former IAS 17. Usually you will not need that information because that will be already posted in your local ERP source, but you will need maybe a reversal of that IAS 17. That's the reason why either you can tick all 3, so you get all information. Usually you will tick IFRS 16 and the reversal of what you have done in your local system, so tick those 2. Or if you say I have even the reversal posting from my local chart of accounts, then you can also opt for only IFRS 16. Close this. Take a short look at the user permissions. So the user permissions can be set both on the entities, so you can decide what user has rights on what entities. That's as described a usual setting. Anyhow, you can also give navigation permissions. So for each part in that navigation tree, you can define whether the individual user is allowed to read or write in that specific point. With regard to the mapping, the system is internally working with a set of internal P&L accounts, internal liability accounts for the long-term part and the short-term part of the lease liability. And of course, with regard to the assets, especially for the right-of-use assets, here using a certain set of internal accounts. That's what you find in the first column on the left side. Now you can opt for each different asset category. You can select your individual chart of accounts. So we have here defined a group chart of account 1, and doing that for different chart of accounts, you can do the mapping here for each a chart of account used in the system. The same thing you can do for intercompany codes. Whenever you have some internal lease contracts, sublease contracts, you might eliminate later on in the consolidation process. That's covered in the application as well. And of course, with regard to development codes, so especially if your consolidation system splits up between a pure account category and a pure development category, we also can opt for the flow codes and can then define for each account what's the corresponding account and what's the flow category, carry forward, current movement, increase in liability, whatever, first time recognition as individual flow codes. So close a few of those. Then you can, of course, define an incremental borrowing rate per asset category and also per period and per company, typically per country. That will help you to cover the different incremental borrowing rates, especially for different countries. Especially you have also the possibility to define that for different maturity ranges. So for those lease contracts, for instance, cars in a short-term range, you can define another interest incremental borrowing rate than for long-term contracts, like for instance, real estate. You define that for one period, and as long as you will not change, it will be carried forward month by month. So of course, it's not necessary to maintain that each month. So you can set that in one time and then do changes whenever appropriate, or make an one-time revision per year in order to change wherever necessary. Everything that has not been changed is no entry will be necessary. Currency conversion rates, that's the conversion rates you will need in order to go from the local contracts in local currency to the functional currency of the entity, and of course also from the functional currency of your entity to the group currency of your full group or subgroup. The system is also able to handle different indices, so you can set up an index and then define the development of such an index, like for instance here, the US Consumer Price Index in the period 2019. Typically you can, that's especially something with regard to the user rights, that's something you can place for the individual user in the local currency, because it might be much easier that they maintain their individual consumer price index instead of someone on a central level doing that for all the different indices. I think it might be even difficult to find out where to get the data from. And of course, the application is capable to handle different languages, so therefore you are able to do a translation in any in any language you would like to support. The application itself is Unicode capable, so you could also use Cyrillic or Chinese or Asian signs. So having that said, on the administration part, what's now the main functions for the users? The main functions for the users is typically to create a new contract. And there we have two options. We have typically the possibility to administrate all contracts within the application. So the typical users of our application use the system not only to calculate the IFRS 16 impact, but they also use the application to keep all data necessary here in the application, to really use that for the administration part. And in order to do that, the users typically use that part of create and edit new contracts. One remark on this, especially when you do the first time recognition, you might have the entry of a few hundred or even thousand of contracts. You might have them already prepared in a database or in an Excel spreadsheet. There we will later on find an opportunity to upload that data quite easily. As we have selected a company one, the system comes now up with that information and says company one is providing its data in US dollars. In order to get the selection, we can take a look into the contracts and say we want to take that into our group one. And in order to get either an existing contract, we can select that from here, or we can say we want to create a new child element. I just call that's the contract number 125, and that's a contract for a car lease for our sales manager. So doing that, we create a new element and have now that lease contract entered in the system and get now the additional categories. So we can first of all do a classification of that contract. We're here in the classification part, so we can now decide what shall happen with regard to the former IAS 17. So typically that will be an operating lease. And we can decide what shall happen with IFRS 16. So typically that contract shall be in scope. Why we do also cover not in scope. So in order to get for the disclosure information all contracts, the users might also enter those contracts, typically not being in scope. Having that done, next step would be giving some additional asset information. So we opt for the contract currency. So we have a US dollar company, so we say that will be a thing in US dollar. As we're talking about the car, it might be the category in the asset class motor vehicles, and we can enter also a lessor's ID, and that's with regard our category number 4. In those cases where you have a portfolio approach, so for instance, having a number of forklifts leased in one set at the same time, you can also provide that as one contract with a portfolio approach and just naming the number of, for example, forklifts. You can also indicate whether it's a sale and lease back, would have the possibility of a sublease, and can also place any kind of comments. You have then up to 6 individual categories, which you might use, for instance, for cost centers, segment, regional information, whatever you like. So they are totally independent from each other, and each of them can be structured in an individual hierarchy with as many steps as even requested. We turn to the component information. Having now entered the contract, we can now give an information for the contract in detail, and we do that on the individual component. The individual component would mean you can really split up the lease contract in the different components. For instance, for real estate, different floors in order to handle them separately using different cost centers and so on. Or really have the lease contract split in its head part, covering the lease for, let's instance, in this case, the car, and to add up a service component in a second part. Then both will be calculated separately, and you can also opt whether the service cost shall really be capitalized or shall be handled also in IFRS 16 as operational expenses. So typically you start with an inception day, so they say that has been done on the 15/12/2018. The commencement day would then be typically the 1st of January, and of course you can also use the date picker and say that's here 2019, and an end date would be then end of 2021. So let's say use again the date picker, so we can go to 21 in December and say that shall be the 31st of December. The asset category, we said motor vehicle in general. If we would have that for that category something different, we can change that. The useful life will be picked up from the general setting of the asset category of the motor vehicles. If we say in this case it's something different, we can overrule that. Opt if there's a service component and add the different dimension information over that, and also include an incremental borrowing rate, either detailed from the contract, or if we don't want that, we can opt for the one pre-selected for that entity in the proper maturity range. Additional information for the fair market value for any kind of calculation, and we can also define the spot rate if that might be different from the one selected here in the application. Having that done, we go to the payment information. In the payment information, we select the payment method. So let's say we are paying in advance. The payment frequency, let's say it's a car, we pay it monthly. So you see the full selection up to yearly available. The payment amount would be an amount for, let's say, of $600 US. Can define any different first payment day, define the payment currency. That would in this case be as well US dollars. Can also define for a different spot rate, and can also define if there's a different first or last payment in a proportional way. You can opt there for fixed yearly escalations. You can opt for the time when escalation shall be taken, and can of course opt here for the different indices we have seen before in the administration part. So you can apply indexation and then deselect the indexation. So when I use that, I can say I want to use the consumer price index for the US, and can define the frequency, how often that shall be done. Next part would then be additional options. So I can select whether there's a renewal option, an early termination option, transfer of ownership, whatever requested. Define whether that's probable, not probable to exercise, what will be the renewal bonds, what will be the exercise price, and having that all defined. In this case, I take the easy one and say there are no additional options defined in that contract. I can take the point and can start calculating that contract. While doing the calculation, I used the time in order to show you a spreadsheet how that can be provided that information into the system from an Excel spreadsheet. So we have a predefined Excel template where you can convert your information already collected in a database or in an Excel file. Can give all those information we have seen in a structured way on the contract, use that, and can really create from here a template to import that data. That's predefined, so you can also define how many dimensions you want to use in that context. You can also define the discount rates by that part, and you can also give different references on the currencies. So everything could be defined here quite easily and user-friendly in an Excel spreadsheet that could be sent out to the individual entities. They can then copy or paste or key in their different contracts. Often it's a few hundreds. Get additional in the definition part, a full set of information. What does the different columns really mean? What information will be necessary, and can then return an Excel sheet that can later on then automatically be uploaded into the application itself. So having that said, we can return to our application and have a look at the calculation part. So the system provides us now with, as I said, the impact in IFRS 16. So not surprisingly, we have starting from January 2019 to December 2021, a monthly payment of 600, and that's the operating expense. Also not surprising, the reversal posting or the reversal of that would be the reduction of the operating expense by 600. And with regard to IFRS 16, we have, of course, now a totally different picture. We first time create, put that a bit to the right. We first time create a right of use asset of around $20,000 US, split that into a long-term loan and a short-term loan. And starting from the first period in 2019, we reduce that right of use asset by the amortization depreciation amount of around 559. That's the one we see here as well in the P&L part, and reduce our loan by the reimbursement, less here the reimbursement part from the short-term loan, and then get the impact of the interest and get the transfer from short-term to long-term liabilities in each individual period. When we go back to the left part, that's the way where I said you can select whether you want to get the closing balances. So that would mean it would accumulate the depreciation until year end and then start from new, or as we've earlier seen, get the movement part in order to get the details here on a movement schedule. Go back here and just a short case with regard to payment information. There you can also now link to a payment plan and have the opportunity to add information like rent-free periods, do any kind of manual payment, do any kind of percentage adjustments, or enter an adjusted amount for the individual period, so you can really set up an individual payment plan for your defined lease contract. So what happens now when you say, well, that was quite fine for the first time recognition, now I have a change? You have then in the second option the possibility to view your contract. So we do that for our original ones. So we have under all contracts, we have in group 1, I think, should have our car lease for our sales manager. We've, I think, only defined one component. Yes, the component 1. And get now the information we've just entered, or in other cases imported. So starting on the 1st of January 2019, 600 payment amount. So we get that summarized. Could, of course, put that into a PDF or an Excel spreadsheet just to document towards your auditors. And we can now say we want to do any changes. So you will never change an original contract. Changing means you are placing an amendment. And in order to do this, you first of all define a date. So we have today the 18th of May 2019. So I place an amendment date, get now the possibility and say, well, there are some changes. There had been, for instance, a price increase. The payment amount is not 600, it's 620. Or in order to get that more significant, 650. And we have also a change in different options. So we have now an early termination option, which we want to add. So we can just click there and could define that and say that is probable that we want to, although we change it from non-probable to probable. And we could also opt here and say the option would be the 31st of December 2020. And there's a penalty to do that of 200 US dollars. Can place that information and can now say we want to use that amendment. So that will be now transferred here with the 650 with the option. And again, we can calculate the contract and will then get the information what has been changed to that. So the contract will then be recalculated with that new information given. So depending, that takes a few seconds. So we already have here the information. So seeing that has now slightly changed in the contract with regard to that IFRS 16 and again the different options. So a slight change in that contract due to the amendment, and you can then follow up that in exactly the same way. So that's the usual process where the users follow up within that contract part. So adding new contracts, importing contracts, reviewing or modifying contracts. Then we have, of course, the opportunity to do the calculation, not contract by contract, to do that in a step of batch calculation. So doing that for selected or all contracts of an entity or even all contracts in one step if you want to pick up a central approach. And get from that the different journal entries. The journal entries here are still based on the individual entity. So you can select there, you get the entities based on the internal chart of accounts for all contracts or for any kind of selected contracts. So you can opt there whatever you want to see and what you ever are allowed to see. The next step would then be to export that data to an for the opening balance for the first time recognition or for the journal entries for a specific period. In order to do this, I show you that from a real case. So opt here how that would look like for a typical scenario. There you would then have really the allocation to the individual chart of account and the flow chart of account used by the customer, and you would see the different amounts in debit and credit and get then really a journal entry that can be automatically used for your ERP system or for your consolidation system in order to do there an adjustment in order to get IFRS figures. And of course, that one can as well be exported to a PDF or even to Excel in order to import that automatically into, for instance, a consolidation system. With regard to the reporting and analysis, that would be an example for a full group. So you have there also the possibility to do analysis and step, for instance, in different regional reports in order to get everything from the details covered, whatever you might need in the system. Besides that, you have here, of course, always the possibility to opt for the reporting. So you get the reports on the functional level for a specific period. So can get the reporting, for instance, for June 2019 for all contracts, for specific contracts, can select by categories like a specific lessor, a specific asset category in order to get all the information requested by the users and requested for your analysis in the group department. So I think we come to an end of today's session. So I hope I was able to give you a fair overview of the different functionalities here, and happy to hear you again with the next presentation on another topic of IFRS. Thanks a lot.